The charts indicate a major crash in the equity markets are coming. Let's take a look in part one of the Sunday Night Chart Show. I'm your host, Steven Van Metre, and thanks for joining me today as we jump right into the S&P 500. We're going to look at the breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average. Remember, when a stock is above its 50-day moving average, or an index is, it's considered bullish. When it's below, it's bearish, and right now, a mere 27% of the S&P 500 is above its 50-day moving average. That is nearly a -2 standard deviation move over the last 1 year chart, looking at the low there being 25%, and it seems that now that's where we're headed. But what about when we pull back a little bit to the 200-day moving average? Now, when we look at the breadth, the percentage of S&P 500 stocks above or below their 200-day moving average, when they're above, it's considered to be in a bull market, below a bear market, and this thing keeps dropping. In fact, we're almost back to the recent March lows set back here and at 37 or 36%, and we are sitting just at 37, again a -2 standard deviation move, suggesting as we look at the charts and see a breakdown that there's a further weakness and selling of stocks to come. Let's take a look at the longer term picture here. And one of the reasons I like to look at historicals, because when you see a breakdown, what happens here? And in the past, when it fails to hold this level, and we can go back and look at some other areas, and there's not a ton of them, but there's a few that really, this one actually shows it held. This one shows it bounced and came down. There's not a lot of them, but if it doesn't hold here and breaks down, you're looking at a large drop in the S&P 500. You're looking at the percentage of those stocks dropping to 20%, maybe even under 10, and that would indicate that we are actually in the early stages of a major bear market, perhaps even worse. Let's take a look at the momentum indicators. We've got the RSI, the relative strength indicator. We're looking for a number over 40 to show that momentum is continuing to move higher. It's now under 35, looking to move to oversold conditions, suggesting from a technical momentum perspective, the S&P can go down even more. How about the MACD, your moving average convergence divergence, or as I like to say, crossover strategy, because where it crosses over is usually that negative divergence. We see it crossed over here, the shorter term MACD line, the black line crossing downward through the signal line. What you're looking for from a trading perspective is a positive cross with the black line moving up and above through the red line, and it's looking like it's headed even lower. How about Momentum Timer Pro? We've got 13 consecutive sell signals, and when we look at the 1 month, 3 month, and 6 month signals, it's telling you it's in a downtrend. So if you're looking to trade this when a sell signal flips to a buy in the daily, you have to keep your stops tight, because what it's telling you, without even looking at charts, you're already in a downtrend, and it's still free. There is now a guidebook. All you have to do is sign up at the link in the corner or in the description below. Get your first report on Monday. And let's take a look at the bigger picture, which of course we kind of know without even looking at this. Price on the 21, 50, and 100-day moving average still bearish. Momentum bearish. Nothing else changing below all the key moving averages. All the longer term momentum signals are going to break, and that's going to trip a lot of algorithmic strategies to sell. Let's take a look, as the charts are ugly, my friends, and we go back to the 2-year chart now, and we've got the volume profile line set here. You can do this with your own charting software, and what you'll notice is we have a supply zone up here that's a sell zone, and down below is a buy zone. How do you know that? It's where you see these little chunks of volume popping out, is where buyers and sellers are at, and we look like we're about at a technical break. The last time we were here was in late February. Buyers came in. Now they're looking at sellers, telling you SPY is headed down to 390. Failed to hold there. You got a little bit of 370 and a much bigger move down to 335 if this thing starts to unwind. So definitely danger. And the charts here telling us a crash is coming. All right, let's move on to the Nasdaq 100, and what do we see here? The percentage of Nasdaq above their 50-day moving average, a mere 18%. That is just above a -2 standard deviation move at 13%. Last time it was down here, well, it didn't present an initial buying opportunity, but eventually did as stocks continue to go lower. This is looking like tech stocks are headed even lower. Let's zoom out. Is this a bullish trend or a bearish trend? And well, this is a bear market trend. We're now seeing the percentage of Nasdaq 100 stocks above their 200-day moving average fall to 19%. Last time it was down here, it was a buying opportunity. Now it's looking like it's going to break support and continue to slide down. And that would suggest, if this does not hold, that you're looking at seeing less than 10% of the Nasdaq being in a bull market. And that is a contrarian indicator suggesting that perhaps a big sell-off is coming and a buying opportunity may be at hand. Let's look at the momentum indicators. The RSI is broken down below 40, headed toward potentially oversold condition, suggesting more weakness in tech stocks. How about the MACD? It's showing no signs of a bottom here, looking like, again, validating more downtrend, and traders are going to stay away from this until they see some confirming signals. How about Momentum Timer Pro? 14 consecutive sell signals on the daily, none on the 1 and the 3 month indicator, 6 month at minimum, telling you it's in a downtrend. So you already know, hey, look at this report every day is validating downtrend. If you buy on a signal flip here on the daily, again, keep your stops tight. That's what it's telling you until this downtrend changes. Watch out below. Price bearish across the moving averages, nothing changing from last week. Momentum bearish below all the key moving averages, 9 month momentum and below. It's all under that. Nothing good here. But let's take a look at the charts and see if there's any hope. And then the answer is no. Much just like the S&P 500, we see that heavy zone of selling in the last 2 years. And all it's telling you is above this, the sellers were dominant. And now look, we're in the supply zone. You had buyers back here, buyers back in here, buyers here, buyers. Now flip to sellers. Next support is going to be down here around 290, 291, maybe 292. And then you've got support below that at 272 if the selling really begins. But this is what you start to see as a topping pattern. And I want to point out, looking at the 200-day moving average, notice how price rejected here, price rejected here. Let's go back to the S&P 500. Price is starting to get rejected at the 200-day moving average. If we zoom out and you go back to prior bear markets, well, what do you find out is it starts to get rejected at the 200-day moving average, and then the top comes out. It doesn't mean it happens every time. It just means that you should watch this for a bigger move lower in both of the S&P and the Nasdaq. And so let's go on to small caps, because as we know, they tend to lead the large caps. Maybe they've got some hope, but why they don't when it comes to a breath. Looking at this bearish trend, only 15% of the Russell 2000 is above its 50-day moving average and showing no signs of slowing down, meaning that this could go even lower. How about the percentage of Russell 2000 stocks above their 200-day moving average? Boy, this thing is saying there is a bear market here in small caps, and if there's a bear market in small caps, there will be one in large caps. From a historical perspective, we're sitting right around 20% above the 200-day moving average, suggesting that this can get easily down to 10 or even lower, just above 0, as we saw back during the great financial crisis, telling us that all this is a topping pattern here in the Russell 2000, and we could see a massive unwind coming. How about the RSI? Not oversold yet, needs to get down to 30. Momentum has broken to the downside. How about the MACD? No sign of a bottom here as the black line's continuing to head lower. Had that negative cross from before. How about Momentum Timer Pro? It's telling you on a 1, 3, and 6 month, this isn't a downtrend. 16 consecutive days of sell. Again, if this flips to a buy and you trade it, keep your stops tight, or maybe wait a little bit and see this thing set to bottom and before you make a trade. Nothing changing on long-term signals. It's all red and not in a good way. Let's take a look at IWM on the charts here and see what we can find. And there is this big, beautiful topping pattern. 2 years of selling up here, as we've talked about in the past. It came down. Hey, there's a little supply zone in here. Buyers. Came up, got rejected once, twice. Here, sellers come in. Buyers don't have enough ammunition to hold it. Let's zoom out to the 5-year chart. And that's telling us that the Russell 2000 is about to close this gap down here at the 160, around 164, 165, and potentially come down to 154 where it was 5 years ago. if you can imagine that. And that is massive danger omen for the broad equity market. And high yield bonds, well, if you're looking for something that's telling you there's a liquidity crisis coming or financial crisis, some major crisis, it's high yield bonds. How about the RSI? Momentum broke to the downside. It's looking like it wants to go down to 30, sitting at 35. How about the MACD? No sign of it. You can see as it goes down, it's like trying to find a bottom and it keeps falling out. Price just continues to go lower. If you want to know what momentum time pro says, you got to sign up for the report. No change, all red on here. How about the chart? You want to see a chart that should scare you? This is it. I mean, look at high yield bonds. They're selling. 2 years, you got all these sellers up here. 5 years, let's go out. All the sellers up there. How about we go to the 10-year chart? Sellers up here. Now, when we go to the max weekly, let's do that. What do you see? When this thing breaks down, you have crisis. I mean, there's literally not much left here, telling you this whole thing is about to blow out and upend the entire market. And that's where I'm saying the charts are indicating there's a major market crash coming. And with that, I appreciate you watching part 1. We'll see you soon for part 2. I'm Steve Van Metre. Thanks for watching. Bye now.